In a note in late March, the economists team at Morgan Stanley raised India's GDP growth forecast to 6.8% for FY25 on a continued capex boost. They followed it up with a note on April 22nd, just a few days ago, wherein they have spoken about healthy growth and benign macro stability likely to be constructive, help them to maintain the constructive outlook on the economy with risks emanating from global factors and elections in May. The author of the note, Upasana Chachra, she's a chief India economist at Morgan Stanley, and her colleague Bani Gambhir, of course, wrote this note. But we have with us Upasana to talk about the key thesis behind the optimism around India for the near term, and also try and gauge from her what she thinks about the slightly medium term. Upasana, great having you. Thanks so much for taking the time out. Not a surprise, but just trying to understand, in a year of heightened uncertainty on the global front, what makes you so constructive on growth in India?
So India's growth trend has been surprising positively in the last 4 quarters, right? We've only been seeing upside surprises to GDP growth. And if you think about consensus estimates that were there, say 12 months back for fiscal 24, have only seen upgrades. So we were above consensus for fiscal 24, say 12 months back around this time, but we have also been upgrading numbers, and so has the street estimates. What is happening is that the Indian economy is benefiting from the cyclical tailwind of very strong fundamentals in terms of strong balance sheets for both the corporates and the financial sector. We are seeing benefits of all the structural policy reform measures that the government has been taking up since 2019, especially at a very at a fast pace. Those are now also reflecting in better real economy trends and data. And from the global side as well, of course, it is an uncertain environment, and it's not the best of situations to be in when we look at, say, export growth. But nevertheless, India is benefiting from some of these otherwise disruptive trends, such as global supply chain diversification. We have been, seeing gains, especially on the services export side, and those continue to hold up. So it's a combination of both cyclical and structural changes that have happened in the economy that is giving us the comfort and also reflecting in terms of better trends in incoming data.
Accompanying these cyclical factors is the fact that global PMI data, Upasana, has started to look slightly better. I mean, I read so many stories talking about how factories across the world are cranking up into being, and the growth numbers might surprise on the positive side. Is there a chance, Upasana, that there might be an overshooting of the optimistic estimate that you have, optimistic relative to the rest of the street, let me put it that way, but the optimistic estimate that you have on Indian growth?
So, well, you're right to point that out. Global factors are actually looking better in terms of when we look at global growth trend, look at growth trend in some of the key economies, especially US, which has been, again, very strong and resilient the whole of last year. Incoming data remains still pretty good and solid. And when we look at it in the export numbers for India as well, that is getting reflected. So exports for, this is just goods exports for last year in calendar year 23 declined by about, say, 4%. But when we look at the last 3 months data points, in the March quarter, exports are growing at roughly at a positive level of, say, 4 to 5% on an average. So there is this, there is this flip that's happening on export growth, and that obviously bodes well at the margin for India's overall growth trend. So while last year exports, or especially for calendar year exports, were not really a big contributing factor or were a drag when we look at it from a net export basis, this year, probably that may not be the case, and the drag may go away. But we are building that up in our numbers as well. We are assuming sort of steady global growth when we take our estimates from our global team. And therefore that, exports may not really be a big drag, but we will continue to, track these data points to see if there's any potential for further upside or changes to our base case estimates. And having said that, I think, most of the cyclical risks for India's growth estimates also stem mainly from global factors, because I think the India domestic factors are pretty solidly based right now. And apart from elections or the policy risk around it, the domestic factors or the risks around it are very few, and therefore global factors will probably play a more important role from a cyclical growth outlook perspective.
What's the election risk, Upasana?
So, of course, we're not going to have any, we don't have anything per se.
No, what I mean is you've said that elections pose maybe an outside chance at a risk, right? So I'm just trying to understand what is that, yes.
So in our base case, we assume a stable government and policy continuity.
Okay.
So to that extent, it is an event risk that we need to track for.
Yeah. Oh, okay, fair point. In the note that you wrote late March, you wrote that you expect growth to be broad-based and the gaps between rural-urban consumption as well as private and public capex to narrow in 24-25. Let's start with consumption. For the longest time, people have been hoping that this will change. It's not quite shown the signs. Early signs from the FMCG companies also doesn't seem to suggest that it's, or maybe I'm reading it wrong, but it doesn't seem to suggest that it's happening in a hurry. Will this, if it happens, be back-ended? And what could be the driver for at least the rural consumption to kind of converge with urban?
Right. Fair point, and I think we always get these questions on rural demand and rural consumption, and we obviously also see that in the data that rural demand or low income demand has been lagging urban and overall consumption. I think before we get into what can cause the recovery and how we see that playing out, I think just to get a sense of what caused this sluggishness and this delayed recovery is also important to understand. So I think the impact of the pandemic on the rural and the low income segments has been far harsher. So therefore, the healing that they needed from, or the healing of the balance sheets from those disruptions also took longer in terms of time period. And secondly, after the pandemic and the economy opened up, obviously labor market conditions, etc., started to normalize. But for the rural and the low income segments, there were again more successive shocks that they had to contend with in the form of high inflation, especially in CY22, and then sort of not so great monsoon outlook and monsoon season, and therefore not a very good agriculture output year in the last year. So I think successive shocks have just delayed that recovery that started with the opening up of the economy, and therefore we have been seeing this, this thing that rural demand is not really recovering in a hurry, as you also point out, just because I think the shocks that that segment has been facing successively have just delayed that recovery. So now as we think about fiscal 25 and when we say that rural and urban demand should converge, or the gaps should narrow, in our view, rural should continue to pick up. When we look at high-frequency rural activity data points and we aggregate all data points that we can get across labor, employment, demand, wages, terms of trade for the rural sector, what we are seeing is a slow-paced recovery in those aggregated rural high-frequency data points. And I think as we go further into fiscal 25 and fingers crossed, but it does look like the monsoon season is going to be a good one, at least better than last year, and it is likely to be now normal or above normal in terms of rainfall trend. That should again bode well for agriculture output and therefore rural and farm incomes. And therefore, in the absence of any further successive shocks and this improvement in rural agriculture outlook will bode well for the rural economy. So I think probably after the monsoon season, we'll see more signs of that recovery taking, or the pace of that recovery increasing. And, that's why we say that fiscal 25 probably will be the year that gaps should narrow between rural and urban.
The other thing is capex. And there are some quarters, Upasana, who tell me that don't look at the credit growth of banks to understand whether private capex is happening or no, because the private sector is not necessarily going to the banks for the whole funding needs per se. What's your sense on private capex? Being again spoken about for a while, some believers out there who say it's underway. What's your observation?
So when we look at again private capex, I think high frequency data points are not too many to get a good sense of where we are in the cycle and recovery. But yes, some of these coincident data points or data that you get from say CMI for private projects and the implementation of new private investments and new announcements of new projects, the trend of that will show that private sector investments are definitely doing better than where we were pre-pandemic. Now, those numbers are quarterly and they do exude some amount of volatility, but I think ignore the volatility in the quarterly numbers and just focus on the trend. We will see that the things are much better than where we were pre-pandemic. So things like capacity utilization, it's been tracking up every quarter, slowly nudging above 76, tracking above long-term average, improvement in new investments by the private sector, even under projects under implementation, pick up in real estate capex activity, and therefore, in data points like steel, cement, production, etc., all point out to, presence of a capex cycle. Of course, in this capex cycle, the role of the public sector has been far greater in this initial stages of this capex cycle. Again, from here on, we think that the role of the private sector will start to improve and increase. So up until now, capex has been a key driver of the overall growth, driven more by public capex, and private capex is showing more nascent signs of recovery. And as we look forward, I think with improving end demand, increasing capacity utilization, uncertainty probably related to elections, etc., behind us, we'll see more definite signs of private sector capex also picking up. I think, I'll just make the last point that I think we're probably just about 2 years plus into the recovery post the pandemic. So it's still very early stages of the expansion cycle. I think India's economy is set to, the stage is set for many more years of expansion to continue, and therefore I think it'll be a bit unfair to judge the private capex recovery in the last trailing 2 years data point. So we'll probably need a little bit more time to get more definite signs of private capex, and we think that fiscal 25 should show that.
Upasana, lovely talking to you. Thank you so much for taking the time out and speaking to us, and look forward to have you more often on the channel.
Thank you, my pleasure.
And viewers, thanks for tuning in.